Awesome. All right, we're just going to give everybody a little bit more time to come in. We got a good program for you today. There we go. All right, we got a good program for everybody today. We're going to be talking about how you can increase your profitability in your business by using different funding methods to implement your health insurance, your employee benefits program. It's uh, it's a very hot topic. I mean, I say that I'm in the industry, so I'm a little, I might be access to different information. But the reason why it's a hot topic is there's a lot of things going on. We talk about inflation, and we'll get into a lot of that. And costs are going really high for companies right now. So we got a really good expert in the field who's going to talk about how you can, increase your profitability, streamline your business. And we'll definitely get into that. How much people do we have? All right, so we got 9 people in here. So just some housekeeping. Chain, as always, if you're not a member of the Maryland Blockchain Chamber of Commerce, if you're interested in being a partner with an organization that connects, advocates, and educates Black businesses across the state of Maryland, you should just go ahead and join the membership. You don't have to be Black to join. You also don't have to be a business owner, right? We have individuals in our team um, who do not own a business. They work for companies. So now's a good time to join. This is a very good time to join. I was having a conversation with someone about some of the partnerships we formed, whether it's with the SBA, with FSC First, with Montgomery County. We have a couple more coming in the works. So now's a very good time to join the organization. Real quick, some housekeeping. This evening we have a networking event. So you'll be able to meet some of our board members, network and connect with other members of the chamber. This evening we'll have this coming up on the screen. We have a networking event. And you're going to be able to meet our Montgomery County Advisory Board. So we're talking about some of the things that's going on in the chamber. We're really becoming a statewide chamber now. So we're trying to make sure that if you're in a region, you can get the access and the connection and the access to resources that you need. So we're setting up regional advisory boards. We have one in Prince George's County. We have one in Montgomery County. We're working on one. Well, we also have one in Western Maryland. This one right here is chance to meet the Montgomery County Advisory Board. If you're in our audience and you are in Montgomery County, just put a MoCo in the chat or something, just so that we know that you're here. These have been really good networking events. It's going to be at Echo House in Rockville from 5 to 7. Let me just let somebody in here. From 5 to 7. So good chance and opportunity to meet some of the other businesses and just some of our leadership team. Next, we have, what is it? Next week, I think it is. You can put up the other flyer, Melissa. Next, we also have an event. I believe it's next week. Melissa's going to put it up on the screen here. Value proposition. Yes, this is one of our SBA. We talked about our partners, Montgomery. These are 3 of our partners that are sponsoring this one: the SBA, Montgomery County, and Level Up. This is going to be a 2-part series by our SBA partner on value proposition canvas. It's just a business strategy work session. Again, good time to join the chamber. If you're still thinking, oh, I don't know what to join the chamber, join our newsletter at least, so that you can kind of get some information to what we're doing and how you can get access to some of the resources that we're doing. So this is a good one. And this is a big one. You got some time to plan and prepare, but this is our signature event. We put on a lot of networking events, but if you really want to see what we've been working on, what we have coming in the pipeline, really get to meet some of your local politicians, some of the business leaders in the community, be able to network and engage with them in the state of Maryland, you definitely want to sign up for our annual meeting and awards banquet. We're going to be honoring some of our partners, some of our businesses and some of our members. We're going to have a keynote speaker from our Congressman Glenn Ivey. This is going to be Thursday, November 9th at 6 to 8:30 at the Hall in College Park. For all those people that say we only do events in Montgomery County, this one's going to be in Prince George's County at the Hall in College Park, which is, I've been to the venue. It's a very nice venue. It's going to be a really classy event. So, get your suits, get your tuxedos, get your banquet dresses. This is going to be a good one. We've been putting a lot of work into that. So just wanted to do some of that housekeeping. How are we on time? Okay, yeah. So just want to do some of that housekeeping. Melissa, could you put a link to our calendar for those who may be interested in knowing what's going on, as well as a link to join the chamber as well. So as always, we always like to start with to kind of get you guys engaged, find out who our audience is. It kind of helps us and our presenters know, all right, who's in the audience who we're talking to? Is this information that can help them? You know what I mean? What's the level? So we want to launch a poll right now. Could you go ahead and launch that poll? I always get, oh, there it goes. I guess it's C. So, okay. So the first one, are you an MBCC member? If you're not, I'm going to say it again. It's a good time to join. Let's see what some of these results say. All right. So they're coming in. It looks like got a couple people that are not. The next question is, how many employees do you currently employ? All right. So 1 to 10. 11 to 20, 21 to 50, 50 plus. And do you currently offer employee benefits? Either yes or no. And the reason why we're asking that is because it's right in line. So let's give people a little bit more time we got 7 people joined. We have 13 people in the audience. So minus us 4, it's about right. Just give people a little bit more time to respond. All right. So right now it looks like we only have 1 member in our audience. Man, you guys got to join. And I think we have our executive director. We've been offering a lot of this content and programming for all of our members. And, some of our members are starting to complain, like, why am I being a member if, So we've been thinking about strategies on how we can add more value. We got a lot of things coming. We've been talking with our IT team to figure out how we can offer a lot of these videos so that you can rewatch them. If you missed them, you can go back and watch that. It's only going to be for our membership. And then we're also talking about some members only events. So if you're not a member, now's a good time to join. How many employees do you currently employ? It looks like we have 5 people, about 70% between 1 to 10 employees. And we have 2 people on here with 50 plus employees. And do you currently offer employee benefits? 3 said yes, and 4 out of the 7 people who responded said no. So this is definitely relevant information for our audience. And with that being said, I'm going to go ahead and introduce our guest this afternoon. Let me add him up here to us. Anthony Robinson. Now, I know this guy. How you doing, TJ? Well, I call him TJ, but you guys got to call him Anthony. But Anthony is an expert in the health insurance field. He's been in there. I won't age him, but he's been in the gray hairs do it itself. He's been in there a while, but he's very knowledgeable. He's been integral in kind of my growth in the industry as a commercial health insurance broker. There's many times I call him up. I'm like, TJ, how do you handle this? How do you? But he's a wealth of knowledge, and he specializes in what we're going to talk about today. So TJ, just want to thank you for taking the time to speak to our audience and our members. And we're going to dive right in. I always like to start this, just to kind of give our audience an idea of your background. How did you get into tell us a little bit about first what you do, and 2, how did you get into this industry? How did you get into this industry?
That's a good point there, Nelson. And first, I just want to say, I'm honored and I'm happy and blessed to be here and to share this experience with everyone on the webinar today. So, a little bit of story about myself, and I'll start off with what I do. I'm currently in charge of stop loss at a very large independent TPA. It's called third party administrator, where we help employers transfer over from being fully insured over to self-funded. So I know that I'm pretty sure that pretty much everyone kind of ranges on that scale. They may have heard the term self-funded or level funded, and we're going to dive into some of those topics today. But that's really where I specialize in towards the latter part of my career where I'm at today. I started off in the industry, quite frankly, right in the mailroom. So
Right.
started off in the mailroom going on over 20 years ago, just fresh out of college, and an opportunity came my way I couldn't deny. So I jumped right from the mailroom right onto the broker floor. So I've been on the broker side, I've been on the insurance carrier side. I've seen a lot. I've worked with employer groups as small as two employee, two life groups, all the way up to 10,000 plus. Some very large international and national employers. So I've had a very blessed and fortunate career. So yeah, I'm excited to share with everyone my knowledge. And a little fun fact, I'm also a firefighter in the state of New Jersey. So yeah.
Interesting thing. So Will, right? Will, he called me. He was like, "Hey, is TJ still in the industry? I heard he's gonna be on our webinar." And I was like, "Yeah, he's definitely still in the industry. Why do you ask?" He's like, "I thought TJ was a firefighter." So
Mhm.
yeah, you do some volunteer firefighting as well. So
Yeah,
very well-rounded background.
I
Um,
try to be, coming out of COVID, definitely wanted to do something positive. So
I
that's what I
got you.
got out of it. Yeah.
Got you. So it's interesting in the industry because you say you work from two all the way to 10,000 plus.
Mhm.
And it's like the thing I love about the industry, it's kind of very similar to accounting. I got a background in accounting as well.
Mhm.
And the similar in a sense is that you're kind of in a position where you see a vast amount of different businesses
Mhm.
across industries, across different sizes, like you said, from two all the way to 10,000.
Yeah.
So coming in contact with all these different businesses, it really gives you a very wide breadth of knowledge about business scenarios. And then let's talk a little bit about our topic today. Now, for the most part, I know there's a lot of terms in our industry, right? And people get
Mhm.
confused. And I think a lot of business owners or HR managers or even employees are intimidated by all of these big terms
Yeah.
that are thrown around. It confuses people and people get intimidated by it, right?
Mhm.
So, but what I want to do today is just really try to educate our audience on what some of these topics, not too in depth, but just more
Mhm.
so to kind of, give them some knowledge about it. So
Right.
let's talk about the different types of them. So I know there's fully insured,
Mhm.
level funded, and self funded. It kind of goes
Mhm.
along that spectrum, correct?
That's correct. Yeah. And there's also some other little, satellite options all in there
Right.
as well. But you're absolutely right. It kind of takes you through the spectrum of, let's start off. Most,
Mm-hmm.
from the poll you did, at the beginning of the webinar, I'm pretty sure that most of the individuals and the guests attending are likely fully insured. Now, what does fully insured really mean? It means that you pay a flat premium
Mm-hmm.
regardless of the utilization of your plan. So whether everyone who's employed in your company goes to the doctor or no one goes to the doctor, you're still paying that flat premium amount, similar to your car insurance or any other premium insurance that you're paying. You use it regardless of the utilization, you pay for it. Now, self-funded or level funded, well, let's go to level funded. Level funded, it's kind of gives you the best of both worlds, right? It gives you a little bit more flexibility than you would have in a fully insured market. When you're fully insured, you pay your flat premium and then you select your plan type. Now, that plan type is going to be, quite frankly, off the shelf. It is literally a cookie cutter plan that the carriers offer, not much customization that you can really do to it. And also visibility and transparency into the plan itself. There's little to no transparency, if at all, especially based upon the size of your overall employee population. That is also a key denominator there for a fully insured plan. When you get into level funded, they give you a little more flexibility with that. You get more flexibility with your plan design, which is great. Right now, you can really start to customize your plan and tailor fit it to your employee population.
Let me just
What's
stop you
going to
real
work
quick,
best?
just because I want to like
Yeah.
kind of unpack it. And when we talk about plan design, right? Because if you're fully insured, you may not really
Mm-hmm.
know what that means that you can actually design your plan. What are some of those aspects of plan
Okay.
design
Yeah.
that you may have some flexibility over and some of these other options we're talking about?
Yeah. So we'll dial back a little bit. So when we're talking about plan design, we're talking about co-insurance, we're talking about deductibles, we're talking about what is the comfort level there, right? As you start to move the needle,
Mhm.
if you want to, like where you have a lower co-insurance, or excuse me, a higher co-insurance. Co-insurance is literally exactly what that means, co-insurance.
Mhm.
What are you willing to pay, and also what the insurance carrier is going to pay. Copay, right? It's exactly that. You're essentially paying a portion for the I want to say uh, the amount allowed or negotiated with that particular provider. So your copay for going to a PCP, a primary care physician, maybe $20,
Right.
right? At the lower you go, the higher your premium is going to be. So think
Gonna
about
be
it like this: if you want to pay less out of pocket, you're going to pay more in premium, just like in anything else in life. If you want to just go in and not have to worry about coming out of pocket hardly to anything, it's going to be a higher upfront cost for that particular plan design. So there is
right.
a scale, if you will, and a
So
counterbalance.
essentially, when you say plan design, you can pretty much, based off of your own employee population, what the needs are, right? And I guess
Yeah,
working with a consultant can help you figure out. You can format and customize the plan how you want it to look with some of these other
absolutely.
options, correct? Okay. All
Absolutely.
right.
Yep. So you think about it like that, just to dive into that a little bit more. If you have a very young population, right, that hardly utilizing their health insurance, but want to have it in case of a catastrophic situation, you may say, okay, well, listen, I want to make sure that my employees are at least covered with something, should and in the event they need to go to an emergency room or an urgent care. Now, they're willing to possibly pay a higher premium or a higher copay amount for that service, but they're younger. So they're more than likely going to want to pay a lower premium. So you really start to have to understand your population and really what's going to work well for your employees. When you are coming off of a cookie cutter style plan, you may only have an option of several different, off that menu from that particular carrier you can pick and choose from, and you have to try to find the best fit. When you go into level funded, self funded, you start to have more leeway as far as where you want to move those levers and press those buttons to kind of tailor fit the plan.
Yeah, I didn't want to interrupt you, but you were talking about
Yeah.
level funded plans and plan design, right?
Mm-hmm.
So, uh-huh.
Yeah. So level funded, you start to now get into more of the peel back the layer of the onion, right? You really start to look underneath the hood. You get more visibility and transparency into the plan, but there's not as much skin in the game as you would in a traditional self-funded. So if we're looking at a spectrum here or a slide chart, you got fully
Mhm.
insured on your far side, and you got self-funded or partially self-funded on the other end. Level funded is kind of in the middle. It's a marriage of the two. With level funded, you're still going to pay a flat premium. That flat premium is really a combination of fixed costs and
Okay.
also your maximum liability or expected claims. Because when you go into a self-funded arrangement, you're now looking at claims expectancy. On a fully insured arrangement, you're paying regardless of the utilization of the plan. When you start to go into the alternate funding realm of going self-funded, you're now paying based on the utilization of the plan. So you need to now understand how your employees are going to utilize it, what's going to be the best plan that's going to meet the needs of your employees, and you're going to be expected to fund those claims as they are incurred. Now, funding claims as they occurred can sound, oh my gosh, that sounds like a lot to now deal with. But with the right administrator on in your corner and broker or consultant partner, they're there to help take that burden off you. So they're there to help guide you, hold your hand through the process. The administrator is going to be reviewing these claims with you. It's just a matter of now, think of it as a financial funding mechanism to allow you to have more transparency in your plan And also, you're holding on to more of your money in an interest
Right.
bearing account. So, where you're only funding as needed, not overfunding, regardless of the utilization. So, I hope that
Got you.
that gives some clarification there for you, Nelson.
Yeah, I mean, I think we definitely broke down each one. I think the part that is really of interest, right, is that part where you spoke about um, some of that money comes back to you. So
Mhm.
right there, before we jump in, I just wanted to talk about what are some of those benefits of and I guess some of the maybe the risk that you take as well with going towards self-funded or those alternate funding other than fully insured.
Mhm. So, let's make sure I understand your question correctly. So, you want to know
Mhm.
what's more of the risk that's going to be involved with
Well,
going
what are the
self-funded?
benefits? What are the benefits, and what are some of maybe some of the things you need to be concerned about if you
Yeah.
just if you're thinking about these?
So I would say number one benefit is that you now have transparency into your plan design. You know where your claim dollars are going. Of course,
What's
it
driving
is
your
the
cost?
exactly. So if you can identify what's driving your cost, you can better tailor fit a plan that's going to meet your employees' needs. Of course, DI information is also a key, and employee and patient privacy is also important. So, but looking at how we can be able to really get at the crux of the plan. It's all about running more efficiently, not over insuring your plan. That's what we're really trying to get down to. You're putting the power back into the employer's hands rather than just blindly trusting the insurance carrier. Think of it like this. All of us on this phone, on this webinar, we have some kind of retirement account, right? We're building up that nest egg for the
Hmm.
future. Some of us having stocks, bonds. We have all kinds of a diversified portfolio. Now think of it like this: how would you ever want to make a decision in where you make your investments? You're going to do your research. You're going to make sure that you're putting your eggs in the right basket. You're not going to blindly go ahead and do something. When you're going into a self-funded portfolio, it allows you to have more control over your plan and allow you to make more of an educated decision as to blanket decision on what the insurance carrier is saying, especially at time of renewal. This is what really sparks a lot of employers to want to go in a self-funded route because we see in renewal increases continuing to escalate year over year. Renewal trends, I would say
Hmm.
approximately 12 to 15% on average. Your renewal is going up. So if your renewal is going up 10, 12 to 15% every single year, and yet you don't know really what's driving that cost because that information is withheld from you, you start to ask yourself, well, what can I do? So in a fully insured arrangement, most employers are now left with the only recourse of cannibalizing the plan. They have to now
So,
strip back the
mhm.
co-insurance and deductibles to save money.
So one of the things that I realized being in this industry
Mhm.
is that health insurance is one of the few insurances. You know, you got car insurance, you may pay it every month, and you never get into a car accident, right? You may have house insurance, your firefighter, you may have house insurance, flood insurance, fire insurance, all these insurances. You may never utilize them, right? You may never have a claim against them, but health insurance is one that affects your employees directly, right? And the other thing that I've learned is that that's it's an insurance that you and your families of your employees are going to use. Second, I don't think many people understand the how expensive health insurance can be. From either, I mean, I'm sure some families start to see, but depending on your employer, you may not really be full aware how expensive it is. So when you say 10 to 15, like as a rule of thumb, right? I say, okay, if you have for every single employee, I'm not talking about if you have a family or it's employee and your child, but if you're for every employee, just the employee, it may cost about roughly or between $1,000 and $2,000 per employee. You got 50 employees and you get, anywhere from 50 to $100,000 monthly health insurance premiums, 10 to 15%, that can be significant for a business. So talking about these increases that sometimes I think in fully insured, people get year over year, and they're not really sure what's driving those costs. So
Mm-hmm.
that brings up a really good point. Let me ask you this, Anthony.
Sure.
Um, Now, I mean, I know every scenario kind of plays different, so I don't want to put you in a corner if someone decides they want to have a conversation with you,
Yeah, no
and
problem.
said you said you were going to save how much on average, about how much can you expect, or let me put it this way: what are some of the savings that you've seen you've been able to bring clients just by going to a different funding source to of their for their health insurance?
That's a good point. So, Nelson, I would say it varies based on each group. Um,
Hmm.
and what I do day in and day out, number one, we like to look at how your employee, renewals, your employee plan, your benefit program renewals have been over the last 24 to 36 months. Okay.
Okay.
Because that also provides some level of a gauge, right? Even though there's I want to say, there's lack of information and transparency because the size of your overall population in the fully insured realm, you're still able to kind of gauge because the insurance carrier knows they're holding all the cards. They know if you're a loss leader or you're a profit, for them. So if you're high, if we know the national average is around 10, 12, 15%, and you're getting a renewal increase consistently around 30, 40, 50, there may be some large high claimants on your population
Okay.
that the insurance carrier is not willing to disclose or unable
Gotcha.
to, because also just in a fully insured, kind of once again going back to the comparison, in a fully insured plan, you're part of a giant pool. Think of it like that.
Right.
It all is
Exactly.
based off of the law of large numbers, and in a fully
Hmm.
insured arrangement, because you are, you're so an employee, right? Probably 50, even under 100.
Hmm.
Claims can be very volatile. You're looking at the ups and downs, the ebbs and flows of a swing. So, in a fully insured arrangement, you're taking all of these smaller groups and then you're spreading that risk over a larger pool. And that's how they're able to help stabilize these large insurance carriers, stabilize the annual renewals. However, they do take some time and dive into, especially those that do have a little bit of a higher loss factor, and they do factor in that into their renewal calculation.
Right.
So there is a renewal stabilization factor when you're going fully insured, especially on the low end if you're a smaller employer. So that may be more attractive for you, right? You really don't want to do that. But if you start to go now you start to grow 50, 100. I start to work with a lot of employers, typically around the 100 employee mark, that are now wanting to have more control into their employee population, into their plan design. And that allows them to now regain that level of control. And they're now looking at, rather than being part of a giant pool of claims experience, they're looking at their more in their micro, right? They're looking at their
Right.
universe of employee population and utilization. Therefore, that renewal increase is going to be more concerned upon their utilization as opposed to a gigantic a pool that they've been lumped into on a fully insured arrangement. Whereas they might have been keeping that pool afloat with their good utilization or low utilization of the plan, I should say, they can now benefit more in a self-funded arrangement. So you're once again, it's educating yourself. There's a lot of jargon out there in the self-funded arrangement, in the self-funded world, that you need to familiarize yourself and partner with someone
Exactly.
that's going to help work with you. But once we always hear the the saying, knowledge is power, right? Knowledge is
Right.
absolutely power. Especially in one of your leading cost items as an employer, you need to educate yourself on your employee expenditure and your employee benefit expense. And this is one way that a lot of employers are starting to become knowledgeable about and wanting to regain that control and take that back from the insurance carrier who's been just overcharging year after
The
year.
year.
And
Right.
the unfortunate employer who doesn't know any better has just been shouldering that burden unknowingly, because they have little to no transparency in their current plan design.
Yeah, I think that's another unfortunate thing about just the industry as a whole, right?
Yeah.
I tell this story all the time. Last year, I ruptured my Achilles,
Wow.
right? And the doctor's bill with me, I have pretty good health insurance, but the doctor's bill still, I had to come out of pocket about $7,000 with everything. But when you look at the full medical bill, only because of my background and my wife is a nurse practitioner, so only with my full background and her, we were able to look and understand the bill, but there were still a bunch of things in the bill that we didn't even understand. So transparency, especially on the health insurance side as an employer, is something that working with a partner that can interpret the data for you, help you understand what's kind of under the hood. I always hear you say, let's take a look under the hood, look under the
Absolutely.
hood, and it help you understand what's kind of driving the cost. I think as a business owner, right, that's a kind of a decision that's kind of help you make you a better informed business decision. I think I think for most people, just knowing from my background accounting, employee benefits is a pretty high up on your P&L, profit and loss statement,
Absolutely.
right? You know,
Shockingly high.
yeah. So it's one of the things that business owners, especially if you're a people-driven organization where you have people that work for you, that can be a huge cost driver. So understanding what are some of those costs, what's driving those costs, finding ways that you can kind of save those costs or reduce those costs, I think is critical if you're trying to, you know, you know, reduce or manage your profitability and
Absolutely.
increase that bottom line. So we kind of talked about what the different sources or the different type of funding is. We talk about some of the benefits and some of the things you need to be aware of, concerned of. We talk about what could be some of the savings. All right, so let's say you're really thinking about this, and again, I think people are intimidated
Mhm.
uh, by the information or how to get it through the process. Kind of explain what's the process going to look like. If you're saying, hey, this is a good fit, this is something I want to take a look at. What is that? What can they expect for the process to look like?
Well, yeah. So the process to look what that the inception of that process is number one, you have to ask yourself, okay, do I have the financial bandwidth to
Exactly.
go into this type of arrangement? How comfortable am I right now with my current arrangement? So
Mm-hmm.
if you, I usually use the rule of thumb that when I'm looking at and working with an employer group, um, if they have at least $750,000 in annualized, fully insured premium. So if you're paying
Okay.
roughly about $1 million in annualized premium, you can essentially fund $1 million in claims. Think of it
Okay.
that way, right?
Right.
Now you're funding $1 million in annualized premium regardless of utilization.
Got you.
If you are on a self-funded arrangement and your plan runs profitable, right? Who's retaining
Mm.
who's retaining that surplus? On a fully insured arrangement, you're paying regardless. So that goes to the insurance carrier. Self-funded or this level funded, you now are retaining a portion, if not all, of that margin and savings.
Mm-hmm.
So once again, it's putting power back in your hands as the employer, and it's a financial mechanism to allow your business to run more profitable because you now have control over this. So think about it like this. So you need to understand your plan, understand your financial bandwidth and your liability risk tolerance. You want to look at your overall population. Typically on the smaller end of the market, when I say smaller end of the market, employer groups that are under 50. There are some administrators out there that would look into something like that.
Right.
There's something called a captive. A captive is also it allows smaller employers to go into a risk sharing agreement, which still gives them the flexibility that of a self-funded, but there's a shock absorber because now you're part of a risk pool with known as the captive. So there's
Uh-huh.
a lot of arrangements. When we start to peel back the layer of the onions, people are getting more creative with solutions for employers of different sizes. At one point in the market, going self-funded was only for the jumbo national groups. It was only for
That's true.
if you were only 1,000+ employees, would you ever consider going into this type of arrangement? Now we've seen the paradigm shift and employers lower and lower in market group, 500, 200, 100,
Yeah.
even down to 50 are
I've
now
actually seen
entertaining this.
some carriers are even open to doing even less than 50. right? You know, and I
Yeah,
always say, I mean, every scenario is different, you
every
know,
scenario is different. Absolutely.
right? You know, and I mean, if someone I'm working with someone who's, let's say you're less than 50, maybe 20 employees, we're definitely going to take a comprehensive look at everything to make sure that this is a right fit for you. But yeah, it has been kind of narrowing down more and more. And I think the reason why is because, like I said, that the cost is so it's just getting growing and growing every year, that I think the insurance companies, the business owners, and even the families are looking for ways. Hey, how can we kind of like manage some of these costs, kind of take some of
Absolutely.
these burden off of us?
Yeah.
So okay, so you talked a little bit about that, about the process. So so you said around, you talked about maybe what the size is.
Yeah, I
Um,
would say about 15 above.
yeah,
Typically,
so
see the comfort
mhm.
level start to really come around that level.
And what's some of the data that you and the company your company works for, looks
Mhm.
for when you guys are building it out? Like you said, you mentioned claim data. Is there anything else that
Yeah, so it's interesting, right? We're in the
mhm,
age of technology now. And as mentioned earlier, if you're coming off of a fully insured arrangement, there's little to no data available. All you really have is the claim history based off of your renewal year over year to even assess, right? So you have your
right.
own, your own personal financial bandwidth on how much I'm paying in claims, your historical level on where my claims have been year over year with X carrier, but I really don't have any visibility into my employee utilization because you're paying
Mhm,
regardless.
right.
Um, Now, in the age that we're in, technology has become increased, and in this market of going self-funded, you can now leverage artificial intelligence to help you better assess your risk. Now, this is artificial intelligence that's gathering information that's on the web. It's de-identified, so there's not a name tied to it, but it's pulling information that's driven off of the census document, right? Every employee, what a census document is, it's literally a list of everyone in your employee population, whether you're on the plan or you're not, you waived or you're active, retired or not, right? It's so you're utilizing that, and then you're seeing who's active, who's on the plan, who could potentially elect onto the plan. And
Right.
there's analytic tools that leverage AI, artificial intelligence, that can pull general information, gives you a little bit more insight, allows the carriers, when you go into the self-funded market, more to help them better assess the risk. And it's a two-way street, right? It allows the carrier to understand whether
Mhm,
this is going to be a high risk for them. And then it also allows you as the employer to know whether or not I possibly I have some high utilizers and I'm better off remaining in a fully insured arrangement. So once again, it's not saying that I'm not here to say that self-funding or level funded or captive arrangement is for everyone,
yeah.
but I am saying it's worthwhile being an employer and exploring different avenues as you continue to grow. You never want to stay within your own box. You want to continue to expand. You want to continue to grow, and looking at these different avenues to help you increase your financial, I want to say, you know, bandwidth, by managing your claims experience through different avenues like self-funded can really help employers go a long way. So I've seen employers save, we're
Mhm.
talking millions of dollars, and
Yeah, I've
depending upon
seen
their
that.
size, going in this route.
So all right, I just want to stop. We've been talking, and
Yeah.
it seems like we're going to have a portion for questions um afterwards. I just wanted to see what we have. We said, um, is it the key to health insurance whether or not the healthcare providers, hospitals, doctors, et
Mhm.
cetera, will accept or participate in the insurance plan? So that's a really good point.
Mhm.
Well, and I want to bring it to level funded. How does that aspect? Because most people I talk to them about these options, and
Yeah.
they're worried about uh, how the employee population will take it, right?
Yeah.
They're not going to get access to doctors. Can you talk a little bit about that part of it,
Yeah.
the
No,
network and doctors and hospitals and things like that?
as we talked about. So we've been using these broad terms of level funded, self-funded. So when we start to dive into, let's just go into the level funded, self-funded aspect, right? Going towards that paradigm of the scale. As mentioned, you now have more visibility. You're starting to see more layers of the onion, right? That it's more nuances that you can customize going in this direction. Not only just transparency, which you've heard me kind of mention quite frequently, but also selection of your network, right? Your carrier network. So to that question, I think that's a great point. When you're going self-funded, you're going level funded, you now have the ability, depending upon whatever administrator you're working with, to be able to select your network, whether it be a national network or a local network. What's going to best fit your employee population?
Exactly.
You're not pigeonholed into, once again, a certain plan design and a certain network. You can change your plan design and your network depending upon, how your employee population fluctuates from year to year, depending upon the administrator you're working with. So once again, more flexibility gives you as an employer greater control.
All right.
That's a
So
great question.
yeah, I wanted to just pause there. We're gonna, if you have questions, thank you guys. Thank you, Faye Peterson, for that question. If you have more questions, don't hesitate to throw them in the chat. I don't only have you for an hour, Anthony. So, you talked a little bit about the size of the company.
Mhm.
I always like, because, this is just really an opportunity for our members and the people who join to kind of just, it's a lunch and learn. You're supposed to grab your sandwich, sit at the desk.
Yeah.
We don't want to throw a bunch of slides at you. So I always ask my guests, could you give us, maybe two tips if you're thinking about going down this road? What are some tips for success that business owners or HR managers, for that fact, if that's who you are, what are some things they should take in consideration if they're thinking about going down this road?
If I can give a tip about going down this road, I would say number one, work with a trusted partner. You want to make sure that whoever you're working with is well versed in this area of alternate funding, is what it's more affectionately known in the industry that I'm in. Alternate funding means everything else other than fully insured, quite frankly. They will help hold your hand through that. You need to be able to have that relationship with your broker, consultant partner that's going to say, okay, well, listen, you know, John, I'm gonna be with you every step in this journey. Here's what we do know. Let's gather all the information that we do have available, and let's look at the options on the table. And here's what may or may not be the right one that we want to explore. So I always go by the saying: there's no such thing as bad risk; it's only uninformed risk.
Mm-hmm.
A lot of people feel risk is bad. Risk is not necessarily bad. It's all how you manage it. Are you informed about it? If it catches you by surprise, then yeah, that was a bad thing. But if you're aware of what's out there and you're able to manage it, it's not necessarily bad. The stock market's risky. Everything is risky. Life is risky.
You're a
But we
firefighter.
still
You take a lot of risk.
exactly. But I take big risks for great reward, meaning potentially saving a life.
Right.
So in the sense of looking at your employee benefit program, willing to take on risk to help fund your employee population's benefit plan, right, can help you ultimately, have great reward by saving your company a lot of money that you were just possibly just blindly paying, regardless of knowing whether or not you needed to. So
Yeah.
so just understanding that, I would say that the key thing there is selecting a right partner who has a well-rounded breadth of knowledge in that industry that can help you walk down that and help educate you, right? Not just say, oh, just trust me and not educate you. This is a two-way street. They're there to serve you as your broker and consultant, and then you're also able to bounce questions off of them, and they should be able to help you, and guide you during this process, and you walk away from it knowing more. And if it's not this year, possibly at another time later on.
Before you give your second tip, I think that's a huge point right there. Because you mentioned about the impact it could have not only on the business, but I think people miss the opportunity that, I always say this: health insurance is not really a sexy topic, but it's a very intimate one,
It is.
because you are really meeting your employees where it matters the most. This affects their family. I've gotten calls, right? Or business owners have given me calls because an employee is calling them in the middle of the night, right? Because maybe they didn't select the plan, they go to the emergency room and they're having issues. So it's kind of where the rubber meets the road. So if you could provide a family, retention, recruitment is a big part of
Mhm.
your business and what you want with your employees, right? This is kind of where you can really add value to your employees' lives. So I think that's a good one. All right, I'm gonna ask for one more tip because I think I asked for one more tip, and then we got a couple more questions, and we'll take some questions. One more tip, Anthony, if
Yeah,
you
yeah,
got
no.
any other one.
I would say, another tip would be, just because it worked for ABC company doesn't mean it's necessarily you're gonna have the same results.
Okay.
Understanding that every employer group is unique. So you need to approach it that same way. I never sit down with any of my clients and I say the same thing again and again and again, because each employee population, just like you, Nelson, myself, and everyone on this call, we all have different and unique needs based
Mm-hmm.
upon our claims history, you know, our our ancestry, what we've inherited as far as certain things that we need to take care of. Somebody may be predisposed to having diabetes. You know, these are all things you need to take into consideration. So again, if it worked for your friend, don't necessarily follow a trend. You might want to explore it and see, okay, well, let me see how that worked for you. Tell me what you learned from that process. Be willing to get into a networking group of like-minded individuals, like we're doing here right now, exploring. We're having a safe space to talk about this. For some of us, it's the first time even hearing about it. Let's learn, explore, but don't always expect the same result, whether positive or negative. Just because it didn't work for somebody might work for you. So once again, that goes back to my first point: having that conversation with your trusted partner to help see if what's the right decision for your overall population and
All right,
company.
awesome, awesome. All right, so we got a couple questions.
Yeah, shoot.
While I got you here, I just want to throw some of them out, and I'm looking at some of them, and they don't all specifically relate to level funded, but I mean, we both got a background, so I think we can definitely tackle some of these.
Yeah,
Someone asks, pre-existing conditions drive up the cost of health insurance, right? So I'll let you take this one. And then I could probably take the small business side for those who are not on the level funded side, where we're not going to be able to fit that market right now, at
yeah.
least.
So does pre-existing conditions drive up the cost of
Yeah,
just
of health
insurance in general, of
of
health
health
insurance?
insurance.
Yeah. So I know that was something that was also tossed around during you know
Obama.
healthcare reform. Yeah,
Hmm.
exactly. So that has been something that was really scrutinized, looked at, and was also removed from my knowledge. As far as having the issue of driving up the claims. You shouldn't have any necessarily a pre-existing condition that's holding you back or being necessarily excluded. That was what was addressed during healthcare reform. So
So I don't know if you had touched on the stop loss. And
mhm.
so, well, just to answer the question, from a fully insured side, pre-existing conditions do not drive up the health insurance side
Yeah.
cost. You're kind of based off of where you live, there's kind of like you're in an insurance pool.
Mhm.
Anthony mentioned the law of large numbers. So what happens as far as claims in that pool of people, kind of what drives what's the rates of an insurance carrier says, all right, we're going to increase the rates this quarter versus last quarter. So if you have a pre-existing condition, you cannot be turned away from health insurance for that.
Absolutely.
Now, but to the point from a level funded side, if you do have somebody, let's say you're an employer and you're like, I want to go level funded, but I know I got somebody in my population who has maybe cancer. I know, and you may be trying to factor that in your decision.
Mhm.
What is something that you could do from the alternate level funded, self funded side to kind of address a situation like that?
Yeah, so that's a good point. So let's just say we have more visibility into the plan and we know what's going on. If there's an individual, that is suffering from a tough illness like that, and would be what we call a high claimant, um, you know, the point of going self-funded is not to discourage an individual from receiving the care that they need.
Yeah.
I don't want that to be misconstrued in any way. When you talk about going self-funded or even level funded, there's two other components that we really didn't dive into on this call, but it's called stop loss insurance, right? Stop loss allows you to, it protects you, the employer, from catastrophic exposure financially. There's something called specific stop loss, which is for tied to each individual on your plan, right? You're assuming risk up to a certain threshold or dollar amount. That's what specific stop loss. And aggregate is you're looking at all the individuals on your plan underneath that threshold, from a monthly liability, or aggregate liability, I should say, up to a certain point. So these stop loss components are financial mechanisms built into going self-funded or level funded to protect you, the employer, in the worst case scenario. So, and there's also something called lasering, all right, and in the self-funded world, where if someone has a very significant condition and it's aware and you have to go through disclosure. There's other things that we can dive into, but we probably don't have enough time clearly on this call. But a laser is exactly what it sounds like. A laser is you're pinpointing one individual or an identifying a person in the population that may have necessarily higher utilization than others. And then what you're doing is you're saying that we're going to have a higher level of liability. We're assuming more risk, we're assuming more liability for that individual, on the plan, because they are a high utilizer. But anything above and beyond that threshold, keeping it in general terms, would be eligible for what we call reimbursement in a self-funded or level funded scenario. Well, slightly different level funded, but yeah. But
and there's so much we may need a part two, because we need to talk about, now that you're in, if you are funding your own claims, how do you manage your employee population, right? You want a healthy employee population.
Absolutely.
So now you're really butting the game, but we won't go into that, but it could get deep, right? So someone asks, how do you evaluate what type of plan to engage for only 1 to 3 employees? And I could take that. I do with that employee population all the time. You pretty much make that decision on your demographic of your population. There are different things we can do that can give you, the employer, the flexibility. I mean, you, the employee population, the flexibility to choose whatever plan they want, and also give you, the employer, the opportunity to say, all right, I just want this. What my cost is, it's going to be fixed, and then you kind of share the cost with the employees. But it differs. It differs. Working with someone like myself or Anthony that can help you kind of look at your overall population, what you're trying to accomplish. What's your demographic? Is it older families? Do you have mostly people who are straight out of college? Right? What's the nature of the work? Can help you select that. What about the uninsured population? Aren't America's going to be on the hook for their health insurance costs? Well, I think that's something that we were talking about, right? Is that more and more we're realizing that having people outside of that uninsured out of that insurance umbrella kind of drives the cost for everyone. So with the Affordable Care Act, is to try to get more people under that umbrella. I think what we're talking about today is, as an employer, how can you manage some of that cost yourself, right? Rather than just turn to the health insurance company and just saying, all right, whatever you charge me year to year, I'm gonna pay. How can you manage that? So we're hoping that if you're an employer and you're getting health insurance, we want to make sure that all your employees are kind of under that insurance umbrella, so to speak, because they're a part of your company, right? So having employees without health insurance, they're more likely, and that there's studies that show this. So you'll back me on this, Anthony, that you have employees without health insurance, they're more likely to take off from leave work, right?
Yeah,
they're more likely to get sick, right? Yeah, and you're losing that productivity by not providing that umbrella. Okay, let's see this. This is a good. Let's say we have another question. When you have 1 to 3 employees, what is the average plan cost for the owner? Is it better to get health insurance through the business or on Obamacare? Again, from a small business standpoint, it can vary. I use the rule of thumb anywhere from, and I just rule of thumb. We got to look at the situation from $1,000 to $2,000 per employee, right? But you can share that cost with the employee, meaning that you contribute maybe you pay 50% of the premium and the employee pays the other 50%. So there's different ways you can manage it, right? Because we're not even talking about having their families on the health insurance as well. But for the rule of thumb, I say you might want to budget between anywhere from $1,000 to $2,000. There's a lot of plans in the marketplace. There's different options, but cost is definitely in your budget. Is definitely one that we take in consideration when we're doing plan designs. Um, do or should the employee have a say in what plan they are allowed to choose? If you select the wrong plan, you run the risk of losing staff. Employees may lose your. So, Anthony, I
Yeah.
learned this from you. All right. When you're an employer and you're selecting a plan, what's kind of a process you recommend an employer to do going around that?
Yeah. So if you're, once again, just kind of looking at broad terms here, regardless, fully insured, self-funded, trying to structure a plan that's going to be best suited for your employee population. Number one, this is information that we all have access to, right? You should know what's the average age of your employee population. All right. Do you have more men versus women on your employee population? I think these are some things that can help give you some broad brush, ideas on how to tailor fit your plan. Do we have older or younger individuals on our plan? Typically, younger people are low utilizers, right? They're more focused on being able to have more money in their paycheck, not necessarily paying more money out in their contributions so they can go hang out on the weekend. Whereas an older individual wants to make sure if they go to the doctor, which they're likely using it for, they don't care how much they're going to, pay out of their paychecks. So understanding the broad brush dynamic, the demographic, makeup of your employee population can help you create a well-rounded plan. And I always like to use two options, right? Probably a base and a high plan. It allows employees to be able to select one that fits them. If you have those who want, because we don't expect, or it's not expected for you as an employer to know the intimate needs of your employee population. Of course, no one's coming in and fully disclosing everything they're going through. That's a private matter. But it is up to you, the employer, to make resources available so that should they need it, they can access it. So that's where I'm getting at with this, and bringing, when we talk about plan designs and creating something, I think you need to make sure that you have a good understanding of the demographic of your employee population and create something that will allow your employees at time of open enrollment select one or the other that best suits their needs and their family's needs.
Yeah, I'm gonna piggyback on that. One of the things that we've done together on stuff we work together is we surveyed the employee population.
That's a great one too.
We went out and we, again, and the same question you talked about, HIPAA and things like that, which is important. But you can put out a survey to your employee population and say, hey, what's important to you, right? What are your needs? Are you more worried about cost, or are you worried about providing options for your children? Do you want dental? Do you want vision? So there's different things that you can ask. One of the other things I learned from you, Anthony, is what happens if you just leave it up to all your employee population and then open them, have them choose? What's going to happen?
It's chaos, man. I don't know what else to say. I think it's going to be absolute chaos because you're going to have everybody, it's like having a house full of hungry people saying, okay, listen, what do you want to all eat tonight? Everyone's going to have a different opinion. So
exactly,
as the employer, you kind of got to bring that scope together and say, okay, here's the best of both worlds, right? Some people are just not going to be happy, and that's okay. But you need to also weigh the options and of the business, right, from a cost perspective, and then considering options that you feel is going to meet your employee population. So I think marrying all these different techniques from a survey to a general understanding of the demographic and makeup of your employee population can definitely help you, create a good foundation and a groundwork for a benefit plan for your employees.
Awesome. Oh man, it was great having this conversation with you. I think we might have to do another one. I think we might have to do one on just small business. I know you're really well rounded. I know you're kind of in the level funded and you're playing with the big boys now. But it looks like a lot of our members are smaller business owners. And we look like we had some questions. If you guys are interested in maybe talking a little bit more, I'm gonna with Anthony or even myself, I'm gonna go ahead and drop this inside the chat. It's just there's someone asked if there's slides. We didn't want to throw a bunch of slides at you.
Yeah.
We will send a video out to everyone, but if you do definitely want to just talk a little bit more, maybe you just have some questions. I just put a link in there. You can schedule and put a meeting on my calendar, and I can help connect you with Anthony. We work together as well. So that's there. Remember, we got a networking event coming later this evening. Melissa, can you put that in the chat again? Anthony, thank you so much for joining us today, man. You probably gave us a wealth of knowledge. We might have to do a
I'm happy.
deep dive where you actually kind of start really kind of breaking down health insurance for our audience.
I'm happy to do so. Thank you for having me.
Yeah, thanks, man. So yeah, Melissa, could you go ahead and put the event for tonight, the Eventbrite for tonight, if you really want to come, you're thinking about joining us there, definitely join us tonight. I'll be there. A lot of our leadership would be there. Ken, is there anything you want to add? Do you want to say anything?
I'm good. You did a great job. Thanks.
All right. So we got that event. Remember, mark your calendars, November 9th. I got that right?
Correct.
Annual meeting. Please mark your calendars. I'm telling you, that's one of my favorite events. We get a chance to really walk you through everything we've done over the year. We talk about what's coming up next year. We're going to be honoring a lot of our business partners and some of our members. It's a chance to just network and meet business owners, some of the real movers and shakers in our community are going to be there as well. So it's a chance to come out, look your best. So book your calendars for that as well. I think Melissa put it. If you guys want to scroll up to the chat, let me just go ahead and copy it over there for everyone. So you guys, if you came a little bit late, that's a link I just put there. That's just to our website. And you'd be able to find our calendar from there as well. All right, so it's past 2:00. Thanks everybody for attending. Hope to see you later tonight. And we do this every month, so stay tuned. If you're not subscribed to our newsletter, go to our newsletter, and that way you can stay abreast of what's going on. So thanks everybody for joining.
Thank you, Nelson. Thank you, Anthony.
Right.
Or is that TJ?
Yeah.
Thank you, everybody.